Well, Nobel Prize winner Joseph Stiglitz recently said that the green shoots of economic recovery are turning brown. They're wilting. What does he think we need to get the green back in the market? Another shot of stimulus. A former chief economist of the Congressional Joint Economic Committee, however, disagrees. Brian Westbury, now chief economist at First Trust Advisors, joins us now live from Wheaton, Illinois. Brian, you disagree. Just how strongly here?
Yeah, very strongly, Margaret. The thing about stimulus that I think most people misunderstand is that in reality we have to borrow or tax every dollar that the government spends from the private sector. So if you borrow it, obviously that means somebody else can't borrow it. And if you tax it, that means somebody else can't use it. So in fact, my belief is that stimulus never works because all you're doing is shifting resources from one hand to another. And therefore, I'm kind of appalled that somebody would call for more stimulus after we already have trillions and trillions of dollars in debt piling up right now.
Well, Abby Joseph Cohen of Goldman Sachs was on this network earlier today. She says there's a recovery happening right now. Do you agree with her?
I couldn't agree more. We wrote 3 months ago that the recovery was coming. In fact, if you go back and look, January was when retail sales bounced back or started bouncing back. It hasn't been a perfect month after month increase here, but January retail sales jumped 1.8%. Housing starts have been up for 4 months in a row. Single-family starts are up 30% from the bottom. We've seen this in the ISM indices. We've seen it in initial claims, which peaked in March. And none of those pieces of data could be attributed to the stimulus plan. I mean, if you look at how that spending is unfolded, it happened after the economy already turned up. So my view is that the stimulus has not had an impact on the economy. It's not the reason that we are recovering right now.
Well, we had that New York manufacturing report out this morning. That was seen as a rosy sign there, even though manufacturing is only about like 6% of the trillion-dollar New York economy. When you look ahead to the Philly Fed, when you look to some of the other indicators we're going to get this week, what should we actually be excited about, and what should we tune out sort of as just the noise here?
Yeah, I think in fact, pull up a chart on Bloomberg of the New York Empire State Manufacturing Index. It's a V at the end. We fell off late last year in just about every indicator and then bounced sharply, and we have a V-shaped recovery underway. And my view is that we will continue to see that V-shaped recovery unfold here in the months ahead. It's really based on a couple of things. Number one, the Fed is very, very easy. It's accommodative monetary policy. Number two, the panic ended. And number three, mark-to-market accounting was finally corrected by FASB in March and April of earlier this year.
Well, Brian, you're in the V category still. There's some saying there's a W, that there's yet more to more pain to be experienced here. Look at what happened today. Wasn't Asia supposed to be leading us out of this economic slump? Wasn't that where the growth was supposed to be coming from and then coming back here? Yet what we saw in Japan, viewed by the market to not be enough. Real doubts about the kind of growth that's happening in China right now. What's real here?
Sure. You know, I go back 6 months. Everybody doubted that we would have any good news out of the U.S., and we've surprised the consensus. The conventional wisdom was that we were not going to have any kind of recovery, you know, a U at best. People were talking about in hell, all this kind of stuff. And yet here we are with almost, and everybody's now raising their forecasts. And the second point I want to make about this is that not every piece of data is going to go straight up. I mean, remember, there's hundreds of millions and people that we have to measure, and you know, there's revisions and later on in history. It's very difficult. A lot of this stuff is statistically adjusted, and you know, so I wouldn't take any single number as being the end-all be-all of anything. It's pretty clear the markets are up over 40%. Almost every piece of data is tracing out a V-shaped recovery, even though it's not every week and every month. I think that's going to be the pattern that continues for the rest of this year and into 2010.
But Brian, you do say there's something to be fearful of right now, a horror show of sorts that may be happening here because of a change in accounting.
Right. It's like the Terminator, you know, every time he melts, he forms back up and comes after you again. And the horror flick monster just won't stay dead. And that is FASB now the Financial Accounting Standards Board wants to apply mark-to-market accounting to all assets and hopefully liabilities, if this is where they go in the banking system. In other words, they want to mark-to-market loans at the bank level. And I think what we saw last year is the damage that mark-to-market accounting did to our economy.
Right.
It turned a serious problem into a catastrophe. This would be a disaster. So yes, I am worried about that.
All right, Brian Westbury, Chief Economist, First Trust Advisors, will be watching that.